fucking up, right? I'm out there actually making an effort trying to stop the fucking scam. Everyone else is like, oh, fucking that Richard, yeah, he's a scammer.
Call it a scam, nobody really cares. We can tell you the only one that ain't prepared. Oh yes, I'ma be a millionaire. 5, a couple trillion shares. Oh no, I ain't getting wrecked again. Richard Hart, he got us set to win. We're a family, we all the best of friends. We ain't a cult, man, just call us Mexicans. ICOs, pump and dumps, they always try to take you. Buy low, sell high, I'm tired of your fake news. You need a token, you broken, you wanna see some massive gains? Lambo, new crib, model, wife, cash and chains. Look no further at your final destination. Don't be complacent every day when you paper chasing. Choose the best, leave the rest. Stop investing like you press. The only crypto that you'll ever need is HEX. Call it a scam, nobody really cares. We can tell you the only one that ain't prepared. Oh yes, I'ma be a millionaire. 5, a couple trillion shares. Oh no, I ain't getting wrecked again. Richard Hart, he got us set to win. We're a family, we all the best of friends. We ain't a cult, man, just call us Mexicans. Your investments are safe, it's got defenses. A mutable contract that pays trustless interest. I don't understand why everybody is hating. HEX is capped at 3.69 inflation. Shares are like hash rate. The higher you take her, the more daily interest that gets paid to the stakers. Always do your own research, don't listen to me though. It's complete, it can't be changed. HEX is finito. Call it a scam, nobody really cares. We can tell you the only one that ain't prepared. Oh yes, I'ma be a millionaire. 5, a couple trillion shares. Oh no, I ain't getting wrecked again. Richard Hart, he got us set to win. We're a family, we all the best of friends. We ain't a cult, man, just call us Mexicans. The game has changed, ain't no going back now. Dummies that called HEX a scam can back down. I hope you understand, I pray that you follow me. You owe the entire HEX family an apology. And stay sober, cash out, the game's over. HEX is here for the market cap takeover. Buckle up, we about to be full throttle with multiple auditors where we get paid to hodl. We got the game smothered, sisters and brothers, with no expectation of the work from others. It's complicated, I know that there's a lot to this. For your daily HEX updates, tune to Hexologists.
What's up, guys?
HEX is like nothing that you ever been through, so sit back, relax, and enjoy the pumpamentals. If you like what you hear by now, think twice. Just remember, yo, this ain't financial advice. Call it a scam, nobody really cares. We can tell you the only one that ain't prepared. Oh yes, I'ma be a millionaire. 5, a couple trillion shares. Oh no, I ain't getting wrecked again. Richard Hart, he got us set to win. We're a family, we all the best of friends. We ain't a cult, man, just call us Mexicans.
What's up, everybody? Back again, Dipcatcher Radio. Today we're just going to be doing a quick little stream. Just cover a topic that we touched on. I mean, we touch on it all the time. A couple months ago, leading up to Big Payday, I was starting to think a little bit about what the impact of Big Payday was going to be on the supply. And I had made an estimation. I had a, let's see. Oh no, this isn't it. Was this it? Let's see. I'll have to find it. It was on my Twitter where we were talking about what the annual inflation was going to be per year as a result of Big Payday, because of the Big Payday bonus, it's like it was a one-time interest payment paid to everybody who had an active stake on November 19th. It was that was when it was accounted for, but it was actually paid out and became liquid as those stakes ended. And so beforehand, we had done just an estimate and found that the that the inflation rate early on during the like before Big Payday, so during the 350 days of the adoption amplifier, the supply was increasing by like 500 million plus HEX per day. And so that accounted for like beyond beyond like 100% annual inflation per year. But like for instance right here, like this chart shows the daily inflation, and so from day to day it was going up by like close to 2 billion hex per day. So say 2 over 473, that's like 1% per day. That's like 365% per year. So, oh, hey, what's up, Kimster? Thanks for joining. So during this phase, the inflation was really high. And then after Big Payday, it was a mass increase in supply. And then now, like per day, that number is it's going up by like 1 over 626. So the amount of inflation actually drastically reduced over this time period. And so that is, what like part of what we've been seeing in the price over the last couple of weeks, where after this first amount of Big Payday bonuses got paid out over that first month. Like during the first month, let's take a look on this chart. So in November of 2020, over 77% of the entire Big Payday was paid out already. So that means that 77.9% of the stakers during that time staked such that their stakes ended within that first month. So some of those people were people that had joined like early on, like day one, like all the free claim, like that was in where the minimum claim was, and that was like a lot of people were even before the end of the adoption amplifier, they were staking for just about a year. As part of a stake ladder, 1 year is a common length during a stake ladder, but also just because that was when they were expecting the Big Payday. And I think a lot of people expected the Big Payday dump to last a lot more than what it did, because like I just remember the narrative going forward. People were like, "Oh, Big Payday is going to happen. It's going to dump. Hex is done," and which when you look at the chart, something like that kind of happened. Let's take a look at. Let's just look at the daily chart so we can zoom in on exactly that day. So leading up to Big Payday, everyone was buying in. I think there was big FOMO related to wanting to lock in those shares. Some people were trying to be opportunistic, because when you would go on the go.hex.com page, you would see that the amount of hex that you were going to earn if Big Payday was in this moment, it looked like a really high percentage, because most of the staking happened in the hours and days before the Big Payday snapshot. And so kind of like with other coins, when there's an upcoming airdrop or a fork or something, people pile into it oh my God, I was looking entirely wrong month. in these days coming up to Big Payday, people are piling into it in preparation for that event. And then, kind of as like the market got so frothy that it was just like time to sell. Like many people who were selling in this area, they realized that, if everybody was to stake for a short amount of time, the amount that they could make from the ROI, say from this move up, like going from, say they bought down here in this like 0.004 range, and now it's 0.002, like these people just 3x their money. And it kind of became clear the more that time went on that maybe you weren't going to get 3x. And so I think, just like during this time, like it was, if we were to pull up like the Bollinger Bands, for instance, during that time, like it's so far, like the price during this time was so far outside these standard deviations. Like, it's very rare for price to be that far out of off the moving average. And so, like this was, just a fine time to sell. So, that kind of led to this first move down. And then on November, leading into the day of, Big Payday, we had this big sell-off right around it, pretty much from November 16th to November 20th, we saw a massive sell-off that resulted in, I mean, from the high of the 16th to the bottom of the 20th, that was like an 80% sell-off. If we consider the entire that entire peak to the sell-off, that was like 86%. But at the same time, what was happening was an additional, where did we see it? Yeah, an additional 139 billion hex entered the circulating supply. So if we take a look over at the if we take a look at the, what's it called? Not the, this is the total supply. If we look at the circulating supply, oh yeah, Kim Sir says, you're kind of naive if you thought 80% was going to stay. Yeah, I mean, I didn't know how high it would be. I thought maybe there would be a little bit more inactive coins, but, or people that just like weren't paying attention. But that number was really high, so, you're right there. Wait, I'm going to hex.vision. So what we want to look at is what the circulating supply was right before big payday. And then, so we can see how much that additional big payday bonuses that were paid out, how much of an effect that actually had on the supply. So if we go to Discover and we pull up block data, I think this will show us the circulating hex. So if we just go to visualize, say we want to go to not 30 days ago, how many days ago was that by now? Like 90 days. And let's change this so it's a date histogram by day, and we want the y-axis to be the maximum, because we're looking at like what the maximum reported field was on that day, so the maximum of the circulating hex. Okay, so this is, so leading up to the big payday, like the market had about 418 billion hex circulating. And then after big payday, the market suddenly, when it kind of normalized after this week where, the circulating supply went down, to there's only 10 billion hex circulating on big payday. When, we go up from 418 to 566, so 566 over 418. So like immediately the circulating supply increased by about 35%. So that's kind of like a stock split in a way, where remember how a couple months ago Tesla did a stock split, and then they were, suddenly the price was lower, but everyone had more money. That's kind of like what happened. So it's kind of like if we were to tack on an additional like 35% to the price forever. So like, although the price appears to be $0.0105, if we did 0.0105 times 1.35, so that's the effective price considering this 35% increase in the circulating supply. That actually puts the price at like the effective price, like the price that a staker who was open on that day is experiencing. From your perspective, the price is actually close to what the all-time high was leading up to big payday, which was like 0.014. So that's like as if the effective price of hex is 1.45. Let's make that a little bigger and yellow. So like right here is kind of like the effective price. It's almost like as if you could just like stretch out like every day after November 19th, if like you could just add 35% to the price every day, because the supply is expanded, and so the ROI that people are experiencing from before big payday throughout, now that their balance is increased, on average it's gone up by like 35%, and so where even I mean the total, so there was 178.6 billion hex per year, and so let's say like what the total amount was. 168 divided by what did we say that number was? 418. So like the total supply went up by about 40% over this period of time, and so that's pretty that's pretty dramatic, and but then what's really interesting about that this chart doesn't capture. Let me find it in my old. Let me see if I can find it real quick. There's a chart that has the actual, like the estimated inflation. Let's see. Yeah, here we go. So I made this like way before big payday, so a couple weeks before, just based on the current share snapshot. And so what I found was that the daily inflation before big payday was like the annualized inflation was like 152%, and leading up to that day, the market was priced at assuming this inflation rate, and then it abruptly drops to what I'd calculated here at like 11%. It's actually closer to it's actually much lower than that, because way more hex was staked in between November 1st and November 19th. That number is smaller, but the same scaling still applied, where before big payday we had massive inflation. Now we have higher than what the 3.69% inflation is, because this was really only over November, December. It was 140.8 billion, but over 2021 we still have 6.8 billion hex coming into the supply. And so compared to the circulating supply of hex at the new year, so let's just see what it was on the new year. 567 billion. So on top of the 3.69% inflation that we're going to see over this year, we have an additional, that was 566. So we have an additional 6.8. So 6.8 over 566. We have an additional 1.2% inflation over this year. And if we were to, what would probably be a better way to express this, because this shows everything in 2020, this shows everything in 2021. This isn't really like an accurate like inflation per year. We could actually, if we were to include all the hex that was minted during this time, maybe it could tell something. But what I probably should have done was, grouped these by month. So like treat a year from 11/2020 to 11/2021. So that would look something more like this. So say even if we just did that. So the sum is 146 billion over 566. So over the first year, this inflation rate on top of the daily 3.69% inflation rate is actually closer to 25%. So this original chart was actually wrong. Maybe I had done something similar in how that was calculated, but at least, so the circulating supply inflation is 25%. I take that back. So the total supply, the 3.69 is applied to the total supply, not just the circulating supply. So that makes total sense why it's so high. But over this year, on top of the 3.69% inflation, that's what we're going to see. Whereas, okay, so say, for this next 12 months, let's see if we can, so wait, 11 to 11, let me make that a little more accurate. So 11 to 10, 2021. Let's get an accurate figure here. Okay, so that's still 146. Yeah, okay, 146. So say from 11 2021 to 10 of 2022, that is 4.6 billion comes out over that period of time. So say 566 billion times 1.039, so that's just like the daily inflation, plus, so this isn't quite accurate, but it'll be close, plus the, how many do we say, 146 billion? So that's like the total supply over the first year. And then with that additional 4.6 billion hex that is coming online after that, then it goes down to like more of like a normal range, because we have only 4.6 billion hex coming liquid. The daily inflation is going to go from 567 billion. Here, let's actually make this a little more accurate. This is just an estimate, just for our sake here, but let's add the 146, because technically the 3.69% inflation applies to this figure, because every day that it comes unlocked, that adds the total supply, and that's what the 3.69% is accounted for. So what do we say, 146? So 556 plus 146 times 1.0369. So that's like the total supply of the year. And then 4.6 billion over that. So the big payday, like the effect of the big payday actually drastically reduces after this first year. And we can kind of see the what that looks like, with this. That first amount of big payday really, has an impact up until, let's say, like it first, like, really bottoms, 11/2021. So every month this year up until then, the inflation rate that is in addition to the normal 3.69% inflation rate, that will continue to decrease every single month. And so, that the big question will be with those hex that comes unstaked after big payday. What do people do with them? Are they gonna sell them? Are they gonna hold them liquid and wait for a bigger pump to sell into? Are they gonna provide liquidity on one of the exchanges? Or are they going to stake again? And if they stake again, for how long? And so, I just think that's really interesting to look at. Just as time goes on, the amount of stake shares that are expected to end that were open. So here's how I did this. Maybe someone could recommend a better way how to do this. But the way I just sorted this out was I just did the discover. I pressed discover, I pulled up the stake shares by extended end, and I searched for stakes that started before this timestamp. I just took it to this site. I searched 11/19 at 12 UTC. Someone correct, maybe if this is wrong, this is what it's all based on. So if this is incorrect, someone correct me, please. So I took all the stakes that started before then, and then had an expected end, greater than that number. So I treated that as like the snapshot time. which could be wrong. This was all just an estimate. I didn't intend to be fully accurate. So maybe someone will have to correct me on like the exact time that I need to collect this sample. But it gave me pretty much what I was expecting, and it doesn't necessarily need to be 100% accurate because it probably wasn't that many people that were like lost in this potential like offset of the dates. And it really captures like the main thing was the main question that I was really trying to ask throughout this was how many HEX of the big payday bonus has already been distributed. And so far that is about 79%. So that's pretty, like when people were expecting like a long fallout from big payday, that's actually not really the case. And because every year, we have, in addition, like 6.8 billion, like, in 2021, we have 6.8 billion HEX coming onto the market. And that 6.8 billion HEX compared to the total, let's pull up the total supply now. So let's just, let's pull up let's copy this one into a new window. Okay, so I don't want circulating HEX. I guess I could have done it on the same window. Yeah, let's do it on the same window just so we can keep. So I want to add a y-axis, and this one is going to be max of total HEX. Okay, so as far as like the total HEX goes, that 6 billion HEX bonus, paid out over this 6.8 billion paid out in 2021. That's only 1% increase in the, compared to the total HEX. So that HEX that's coming online over that period of time, that only accounts for like 1% of the total supply. And I think that 6.8, 2021 is the second largest month, and so if we were to just like estimate what the price is going to do, like this can kind of like how in like Bitcoin and HEX, they're like the name of the game is supply shock. In Bitcoin every year there's that 4-year halvening where leading up to the 4-year halvening, the miners are starting to prepare for that time when their revenue gets cut in half. And at the same time, right after the big payday, or right after the halvening, the market has to react to a sudden 50% decrease in the amount of circulating float that's available for sale in the market. So like these two things are happening at the same time, and that's kind of what leads to these like boom and bust cycles in Bitcoin. It's all about supply shock. And even though HEX doesn't have a halvening, what we do have is we have the echo of the first year launch phase. Like between the adoption amplifier, where we had massive inflation every day, to a sudden decrease in the emission of the daily emission of HEX. We call it the tenthening, because the inflation rate cut by about 90%. And then right after that happened, we have these waves of like supply that's, kind of separate from the normal staking system that gets introduced to the circulating supply. And it kind of goes in this like wave pattern, where we had a lot in the first 2 years, and then over the next period of time, we have like nothing. I mean, not nothing, it's still a lot, but so what we had here, what we see here is, like that, this occurs over 15 years, but this is going to influence, the price action, because the market, like the price is, the market measuring that value of that circulating supply. And so when the circulating supply is being abruptly changed with, like abruptly changing with the, these big payday bonuses. Even though it's like only like a 1% or less, like next year's 1%, it'll only get smaller, like the impact that these have. That bonus being in its own special class of HEX, like this isn't HEX you bought, and it's not HEX you earned from like stake interest. This is like separate. It's almost like, people sell the free money. Like look at the uni chart, people sell the free money. Look at the 1 inch chart, people sell the free money. That may be kind of what we, what this like the impact that this has, like maybe per HEX, minted. If it was HEX minted from big payday, maybe that HEX has a higher % chance of being sold, and entering that like actively trading supply. And so what we'll probably see from this is kind of like how the halvening causes these like boom and bust cycles. We leading up to our first tenthening, we actually kind of see it, with these, like leading up to this, cycle, and like the market has memory of what had happened in the past. And so like, we had, here, let's go to the other chart so we can see the history. Let's put the log. So like, we had this like, during this first year, we had this like big, many boom and bust cycles like within this period. But if we look at here, it was really like, one big boom cycle, 6-month bear market, 4-month bear market, a crazy just like shock where like, massive buying, then a massive sell-off to adjust to the new 30% increase in the supply. And then after that, we had this like continuation, where after that, like the market responded to that tenthening. We responded to a 30% increase of the supply, but at the same time, a 90% decrease in the new emissions rate per day. And then we had like I don't know where to really, I'm going to call it not the full top, because I think that was like a bot. I don't know what to make of that run to like 2 cents. I think that was like, I don't think that was, that was only for seconds. So I don't really count that wick. But if we count like this, like the second high, we like from the bottom of the big payday sell-off, that's like a 6x move right there. And I think that, like if we just take this chart, we have these like big boom consolidation, and then like this like other like boom, to it. Like I think that's kind of like the, that's gonna, kind of echo itself. I think what we could end up seeing kind of like on these longer, time horizons is, in response to like, the daily circulating supply, so like right away from like big payday, we saw like a big sell off, and then, so we saw like this sell off, and then, big sell off, then leading into the new year, we saw this like massive boom, or we started to creep back. But so now that like a lot of this like selling pressure is kind of alleviated. So here, let's do this not to scale. We had this move right here. Big sell off in response to this big increase in the daily circulate, or in the total supply, but counteracted by the decrease in the daily new supply. And then over this period of time, we have that that extra inflation is going away. So maybe like over this period of time, up until when it like, so I think the minimum is, so honestly, like maybe a way we can approach this is like every time that this big pay, like from year to year, the big payday inflation goes down, like the price maybe goes up. But then on years when the BPD inflation goes up, maybe that's when we'll see some type of like, maybe multi-month or like year-long consolidation. Maybe not, just because like, it'll have so much momentum, but like maybe these are going to be like the bearish years of HEX, is like, in response to like, the big payday being paid. These are longer ones. So like keep in mind that with every big payday bonus, every single time it goes on, the ROI that the person received from that is so much higher. To include the longer pays better. And so as time goes on, the like net ROI is probably higher, and the higher ROI that people have, the more likely they are to sell some of it. So we could be seeing that effect, so as the supply increases over that period of time, and then say we have, now that the daily circulating supply starts to decrease again, so we have, maybe like the price kind of goes up a little more between 2025 and 2027. Maybe we see like another push to the upside, and then maybe we see like a big sell-off because between these 3 years it actually goes up a lot. Like we're approaching levels close to what like 2020, like the sum of 2021 and 2022 is about equal to the sum of 2029 and 2030. So maybe between 2027 to 2030, maybe those could be some bearish years in Hexaco, just because the market will be reacting to this. These are like long stakes coming online. Like the first class of the 10-year stake is coming online, and the market may be reacting to people who bought in year one, have massive price performance over this period of time, and they're preparing for the 10-year stake crowd, who's earning the maximum interest per share that they could, or per hex they could earn, plus this big payday bonus, which is equal to like the 2021 to 2022 total big payday bonus. In between this year from 27 to 30, we could see some pretty big inflation on hex, or at least the market responding to that. So maybe we see like another like big bear market here, and then it immediately goes down, down to like to these levels, throughout the rest of this time, and maybe by then the supply will have increased by 3%, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, so like 3% compounded for 11 years. And it's still like this 0.6 billion big payday on 2031. That could be pretty small, like relative to what the total supply is. So by this point in time, I think that the big paydays are actually going to kind of become a non-issue, because the supply will have increased by so much, and like the percent that this impacts the total supply will have also gone down. So let's make that. So maybe it won't be so bearish between there, and so. I think that from this time period to maybe here, maybe we have some like choppiness. New World Order, Hexicans are in charge, but like we're facing like big opposition, maybe speculative attacks. Like who knows what could be happening at that time, But as that the big payday kind of becomes less and less significant, we have these small maybe it's kind of going up like that. And then leading up to the, leading up to here, maybe the market was responding to this big increase again. And also this will be the first time ever that the 15-year stake comes offline. And so the market could be predicting big sell-off during that time period. And so, maybe we have another like mini bear market from 2035 to 2036. Maybe like this massive FUD from, people that were like waiting for this 15-year stake at 0.13, they see the price dipping and they're just like, fuck, like that could definitely happen. So maybe we see another, kind of like consolidation here. But then after that, like, I think that's when Hex will truly, truly be off to the races. Because what we have here is, like at this time, no more big payday, and so Hex will have like accomplished that next milestone. Like the first milestone was no more AA, no more free claim, and well, the first milestone was the Bitcoin free claim snapshot. The second milestone was the end of the AA and the free claims, and then this third milestone will be when the last BPD payout is made. And so that's really the like going to signal like a new era in HEX where there's all these things related to the launch are fully done. The only thing left is the staking and the 3.69% yearly inflation, like truly nothing else. So by that time, HEX is already done with like phase 0 of its launch. That was year 1, but the launch really ends in the year 2036, and so that's really going to be like a new era in HEX where all the remnants of the launch are done. New crop of people. I'll be how old? Like in my 40s. Some of you may not be here anymore, and your spirit will live on through the rest of us. But that it's just like a new era. And then on top of that, on top of just being like a new era in HEX, what we'll see is we will see in real life the ROI of a 5.555 stake. Like right now, all we have is future speculation. There's no way to predict what that 5.555 stake will pay out. But on day 5.555, maybe it's actually 5.556 is when we'll actually see. We will actually see what the result was. Like this like mystical thing that everyone talks about and everyone aspires to, like that Club 5555 thing. We'll actually see what the results were. And so I think that can inspire a lot of confidence in HEX, is if that once the first 5,555 day stake comes online, I think that will signal like, what could the haters say by then? 15 years of fully functioning, like every single feature worked. Like if you consider like every day, every different like discrete day, you could have a stake as like a feature in HEX. Like there's the 1 day stake feature, there's the 2 day stake feature, there's the 5,555 day stake feature. That means every single feature would have worked. And like at that point, like what could the haters have said? And so I think that, this kind of like how the supply shocks in the Bitcoin halvening, they give energy to the market. Because it gives them something to look forward to and speculate on, and then it gives them something to respond to the new reality. So the market like adjusts, and like anytime there's like fluctuations in price, that attracts new people who provide liquidity to the market. And so these supply shocks are really healthy, and so I think that that's a really good feature of the design of HEX, is that we kick off with high inflation. We go to this end of the launch phase where the daily inflation cuts like a tenthening, and then throughout the next 15 years we have this like throttling, like extra supply that gets sprinkled onto the market, that can kind of introduce like new unknowns and like new fluctuations, and so that's I think just like this, even though like this will be the end of the end of like these like supply shocks associated with the launch, I actually think that this will continue to echo into the future, where we have because like the market really just like echoes itself. Like it runs in these waves because buyers become sellers, who become buyers, who become sellers, who become buyers, who become sellers. And so there's this like natural harmony to the markets where people buy, so price goes up, and then once those people sell, then price goes down. And then like people sell to cut losses or sell to lock in profits, whatever the case may be. And so I think the market will kind of have echoes of itself, because when like during this time, 2029 to 2030, and we have 10 billion big payday HEX coming online, maybe those people are gonna be like, wow, that worked out great. I'm gonna stake again for another 10 years. And so like maybe we'll see another like stack of 10-year stakes piling up in the years 2039 to 2040, just like as a result of these first 10-year stakes happening. And so I think that like this general shape of the new circulating supply coming into HEX, like this one shows like what it is on top of just the normal interest, just like pad each one by like 3%. But what like I think that it'll lead to echoes in the market for many years to come, actually. So, you know, if this is the, how do we, oh shoot, I meant to select all of them. You know, so like the market, you know, it doesn't repeat itself, but it does rhyme. And so I think that that's kind of what we will see over this, you know, after this, you know, next period of time, you know, as like, you know, these 10-year stakes turn into another 10-year stake, and we have kind of like another, you know, kind of cyclical nature to, you know, these like stakes coming online, becoming sold, you know, price going down, market preparing for it, so price starting to go down beforehand. So maybe maybe this is something that we'll kind of see, you know, moving forward, is this, you know, like this like circulating supply chart kind of echoing itself into the future, you know, maybe with like less and less amplitude. So, you know, maybe these ones are not as aggressive, you know, maybe they're just like, if we group that, you know, maybe those aren't so aggressive, and they're just kind of, you know, because by then there's a lot less risk, a lot less volatility. So maybe like this echoing of what the price action was during this big payday payout period, maybe it'll decrease a little bit. So yeah, I mean, that's all I have today. Let me go through the chat and see if there are any good questions. With the OA holding 55% or more of liquid HEX, the real staking percent in terms of human behavior is a lot higher. Yeah, that's very true. I mean, the OA, like, it really is just an address, just like everyone else. You know, I think that, you know, the OA is in a unique position, not so much because of the advantage that they got in terms of the supply, but more so that effectively their only benefit is that the penalties impact them. It's like they get half off the penalty, and so, you know, like the OA. So what that means is that maybe someone might have to check my math, but, you know, maybe that means that the OA can open up a 15-year stake and then collect their principal at 3.5 years. You know, so maybe if they're, you know, and, you know, you can only speculate on what the OA is going to do, and like what, you know, type of motivating factors there are with that. You know, so the OA, you know, as far as I'm concerned, the OA is a completely valid address. They can do whatever they want. You know, they could sell. You know, that's factored, like that risk that the OA sells. You know, someone who owns that much, like that's already factored into the price. And so, like, if the OA was to sell, I think some people might be kind of upset, but I think a lot of, you know, I think people may even, like, people have so much respect for the OA and just like so much love for what it represents, because it like created all of this. And so, you know, I bet even if the OA sold some, Hexicans would rejoice and they'd scoop up their cheap HEX. Now the OA just, you know, now instead of having one OA, there's, you know, thousands of people that kind of like relate to the OA. We're like, oh, they scoop up the OA dump and now you stake for 15 years because, you know, the price was artificially low in response to this like big supply shock where, like, you know, all those coins came online, came into the market. So yeah, but I mean, if you were to remove the OA and like all the related addresses from the OA, from these figures, you know, like that, you know, that, you know, if you consider the OA to just be like kind of like dead, like, you know, there's no, like those coins aren't being sold, maybe they'll be staked, but probably not. If you remove those from the circulating supply, I think that, you know, maybe these moves here are going to be a lot more dramatic. And so, because rather than like 6.8 billion, what was that number that we said it was? With the, yeah, so like right now, 5, 6, 7, you said that, say half of that is the OA, because like the OA is generally not staked. So that's, say it's like 6 over 250. You know, like that additional 2% of circulating supply inflation as a result of the big payday payments made this year, you know, that can make a difference. You know, it certainly can. You know, that 2.4% inflation as a result of big payday is larger than the Bitcoin inflation is today. So, you know, you never know what's going to play out there, but, you know, yeah, that's a good point. The OA stake their bag for a few. Yeah, so this chart captures that. The OA staking their big bag. Do you know how to make a graph of average daily new stake length over time? Let's see if we can. So if we go to let's see, change this to stake. If we can't do this quickly, we might not. So you're asking for average daily new stake length over time. So we can do something like, let's pull up, let's see, expected end is the thing that we're looking for. So y-axis, let's just go max of staked days. Nope. I don't know. I don't know. That might be a little bit difficult to make to look at average daily new stake length over time. So you're asking for like per day, how many days are people staked? Yeah, I think that we would have to probably export this data. So like, export this CSV, make sure that we get the expected end and the normal end, and then subtract them and then try to calculate that way. So that's how I do it. I don't want to do that right now. That'll be a can of worms, so I'll just need to dive into a different time, but maybe that's something we can look at. Yashdeep said, what's up guys? Tonto's dip catcher email alerts are solid. Yeah, those are, I'm excited for how that's been kind of shaky over the first couple days, just because literally on the last stream, I literally built it live. Just first try, did it. So I noticed a couple bugs in the first one. For instance, like the rounding was kind of off, and so it just looked kind of weird. And then second of all, one of the numbers that it was pulling in for like a price target, it was pulling in the wrong number. So it's probably, let's see if it's going to go off. See if I can eyeball it. So it was going off on this dip and then going off again here. So price probably is gonna, I don't know if it's gonna go off. Let me see where I can pull it up. No, I don't have it pulled up anywhere. So, it'll probably need to dip again for it to go off again. So, it's sent out a couple times over the last couple of days. You'll just have to check in again. Kimster says, I'm wondering what deflationary influence people losing access to their HEX will have. And also, I think people coming from before big payday are more likely to restake. Great calculations. Thank you. Yeah, so I don't think that the deflationary influence from people losing their HEX is going to be that much of a difference, because I think by now, like so much, like the Bitcoin that's been lost is like, I think that of all coins that will ever exist, Bitcoin will have the highest rate of coins that were just lost, because it operated in obscurity for so long with such bad software, like supporting it. Not bad, I can't say it's bad, but like it didn't have everything that there is today. And so people were more likely to lose it at that time when it was worth nothing and hard to manage. So when HEX launched, like MetaMask already existed, like good practices around seed phrase recovery are, and storage already existed. So I don't think that it's going to be that many people, but something that, it still will happen. Like people will forget their password and not have it backed up. But if their HEX is staked, it actually doesn't experience that like deflationary effect, because every day after that 14-day grace period when your stake ends, the HEX will slowly get redistributed to the stakers. So it actually, maybe what that means is that it'll be deflationary in the sense of like, okay, so say like today a stake ends and the person forgot their seed phrase and nobody does good accounting on them. And so every day that goes by over the next year, they lose like or next 100 weeks or something, they lose 1% of their stake. And then that 1% is distributed amongst all of the stakers. And so people whose stakes end in 5,555 days, they get some of that today, but that doesn't become liquid until the end of that term. And so it's deflationary in the sense that coins that could have become unlocked today are now spread out over 15 years. But ultimately, they will come back into the circulating supply, but just not yet. So you're right that that does have some deflationary influence, but it's more I don't know how you would even describe that. It's like offsetting when that becomes liquid. So I think that's kind of what we can expect there. And you said people coming from before big payday are more likely to restake. Yeah, you're 100% right. I think that after the HEX conference. And just seeing some of the presentations people did, even though everyone already knew longer pays better, like that's like a unanimous fact of life that longer will always pay better. You really, like I think that people seeing their returns in real life, they're gonna, that'll like really incentivize them to like stake longer. Even though a lot of people are like already like, okay, I wish that my HEX was staked longer. I'm just going to tack it on to the end of my stake ladder. That's definitely a sentiment that I've already sensed. Let's see. Does anyone else have any questions related to this topic? Oh, what's up, Balia Brand? What's up, Pabalaba? What else can we check on? Let me see if I can pull up my. See if I'm logged into TradingView on this computer. Yeah, why don't we take a look at the HEX dip catcher email alerts. So for the people who are just watching for the first time, last week we actually built a HEX dip email alert system. I had one for Bitcoin. I've had it since like March or so, and just recently the TradingView pair for HEX had enough. Shit, I didn't update my thing. Oh well. Huh. This is what we did last week. This is what I'm talking about. So you can sign up for the HEX or the Bitcoin one. The Bitcoin email alerts, they're on average 341% up. That's big in Bitcoin terms. Not so big in HEX terms. But I haven't been able to figure out, or I just mainly because I just built it earlier this week, I haven't yet included the HEX alerts into this calculation of average ROI of the dip alerts, but pretty much what I help people do is just know when to buy, and so we can see that on this. Let me pull up the chart here. TradingView. HEX USDC. Let's see, HEX USD. Can we look at stakes coming out over the next 4 months? Yeah, let's do that. Let's do that here. Well, I'm just going to pull up to see if we can tell when this next alert's going to go out. In the meantime, just check out dipcatcher.com and sign up for the HEX alerts. Sign up for Bitcoin ones if you want them to. I should make it for ETH as well. ETH's a little bit different of an approach because it has a different type of business cycle, but it's definitely a good one. So the one on the daily chart, it's not gonna. We talked about this last week. The daily dip alert probably won't go off until price is below like 0.007. So whether or not that happens, who knows? But that's probably when that one will go off. The 6-hour chart went off last night and a couple nights ago, and I think price will have to probably dip down another leg to like the 0.90 to 0.95 range in order for this one to go off again. So Just keep an eye out on that. So, I guess nothing else to report there. So, go sign up if you want to be on that one. Thanks for the share, Bally Brian. I appreciate that. Can we look at stakes coming out over the next 4 months? So you're talking all the stakes coming out next 4 months? Yeah, let's pull those up. So let's just go to one of the pre-made ones. We can, there may be like this dashboard. Staking. Kimster, the Hexagon staking class. Hexagon staking class of 2019. Who was class of 2019? Who opened stakes in 2019? Okay, so we want to look at from November, so say like January 2021. So let's just say today. So between now and we want, not months ago, months from now. We want to look at 4 months from now. This is such an awesome site. Like, name another coin that has such a great website. February 2021. Wow, so we need this to be now. Okay, so this is gonna, okay, so these are the stakes coming out, over the next 4 months. So we'll kind of see these waves. There's just some big ones. So like, 928 million hex coming online on that day. And then like these big ones. So maybe that's what we'll, I haven't done any matching of this chart to the price chart, but maybe this has an impact. So that's what we kind of see. I think, it kind of tapers off after this one, like these like mega short-term stakes. But say we want to, I guess no, we'll take a look at that because I'm gonna have to hop off here in just a second. But New Hexagon 505. Are you from the 505 Balliot? Oh my God. What's up, Hexagons? Oh yeah, I love the fact seeing you guys put in so much effort. Yeah, people do way more than me. I shill on Twitter. That's probably my main contribution to the Hexagon community. I feel like I'm an ardent defender of Hex, and I have been since before it launched. And so, I really love Hex. I really love the the economics behind it. Like it's truly amazing. Like Bitcoin has great economics, and that's what really drew me to Bitcoin at first. But then Hex has awesome economics. There's really nothing else like it. Hex and Bitcoin both have like these, kind of really awesome, like ongoing things where there's always something to look at. Whereas other coins, like, the economics of them, they're not that exciting. Hey, New Hexagon 505. Hey, for you, we're gonna play this song on my way out right now. So I'm gonna go ahead and sign off here in a second, but because believe it or not, I'm a Burqueño as well. And so maybe to sign off, we'll listen to some Roberto Griego in honor of New Hexagon 505. That's so fun.
Writing's not that easy, but Grammarly can help. This sentence is grammatically correct.
We got to make a remix to this called Arriba Nuevo Hexico. All right, y'all. Thanks for having me. I'm gonna let this play out while I pack up my stuff. Excellent day today. This was a lot of fun. We'll have to do this again. I'll be sharing this stuff online, and until then, I'll see you next time.
Yo nací en un pueblo pequeño, muy humilde. Y ahora les voy a cantar de mi pueblo natural, el pueblo en que yo nací, lleva por nombre La Boya, donde vivían mis parientes, mis amigos,
Los griegos, romeros y los moyas. Y ahora les quiero cantar
de mi
Estado popular. Arriba Nuevo México, arriba mi estado querido, arriba mi Albuquerque y arriba con toda su gente. Arriba Nuevo México, arriba nuestra capital, arriba con Santa Fe y arriba mi estado popular. ¡Arriba Nuevo México! ¡Sí, señor! ¡Ay!
Mi querido Albuquerque está en las montañas andías y más allá hacia el norte encuentran más maravillas, y en la ciudad de Las Vegas me enamoré de una querida.
Oh my god. No.
If you work in a team, you should be using
Oh my god.
to manage any team and any workflow.
Ay, ay, ay. Who interrupts the great song with a commercial? But anyways, thanks for having me. I'm hopping off. Arriba Nuevo Mexico. I'll see y'all later. Catch you on the flip.